and welcome everybody to this first episode of China Economy Watch, our new webcast series that provides a regular, concise assessment of the near-term economic outlook for China. My name is Anke Schrader, and I'm the research director for the Asia region at the conference board here. Thank you for taking the time to join us this afternoon. Today, we're going to talk about the dynamics of China's ongoing recovery and the prospects for Q4 and early 2021. We're going to look specifically at the status of China's economic recovery since its COVID peak in Q1, whether the recovery momentum can be sustained in Q4 and into 2021, and we're also going to take a look at the outlook for government policy support. Before we get started, a couple of housekeeping items. We've left some time at the end for Q&A. Please ask questions through the chat box on the lower left-hand side of your screen. You can download the slides we will show via the download box on the bottom center of the screen. You can also share the recording of this webcast with your colleagues. It will be available 48 hours after the live broadcast. And last but not least, please help us improve our webcast by completing the evaluation form at the end of the webcast. I'm joined today by my colleague Gao Yuan, who leads our macroeconomic work at the China Center. Welcome, Yuan. Thanks for joining us today.
Thank you, Anka, for having me.
So, Yuan, let's get right into it. Chinese officials announced GDP expanded 4.9% year-on-year in Q3. The IMF also just came out saying they estimate that China will be the only major economy to achieve positive growth in 2020. So does that mean China's economy is firmly on a trajectory to normalization? When can we exactly expect the economy to return to its pre-COVID levels?
Yes, China's economy is on a steady rebound since Q2, but I'd say it's still far from the normalcy. The recovery is quite unbalanced, with the recovery in consumption significantly lagging the industrial production. We can see it in this chart on page 5, Derek. So it's a chart with GDP decomposed by demand-side factors. The contribution by consumption has turned positive in Q3, but is still much lower compared to the average level in recent years. So in Q3, within that 4.9% growth, 35% of it comes from consumption. But for example, in 2019, nearly 60% of the annual growth coming from consumption. So when we talk about this normal status of the economy, it's not just about the aggregate growth. It's also related to the structure. So if GDP growth go back to above 6%, it's all driven by capital formation. It's not back to normal. For the recovery to continue in Q4 and in 2021, we will need to see more consumption growth. The premise of consumption recovery is the job growth and income growth. Unemployment rate is declining in the past 3 months, but labor market damage by COVID-19 is not just limited to job cuts. There's also widespread salary reductions. In August and September, we've seen lagging demand recovery finally start to catching up with the supply, but because household balance sheet repair is more difficult than resuming industry production or spur the investment growth, a full recovery in consumption is likely to take a long time. We therefore anticipate 5.6% growth in Q4, and meaning that it will be still slightly lower than the pre-COVID rates by the end of the year. But due to the low base, we expect 8% growth in 2021.
Okay. It seems to me that consumption growth continues to be the major drag over the short term. So should we expect the Chinese government to offer cash subsidies, for example, to households similar to what we've seen in the US?
We don't see policy signals for this kind of direct support. So far, the policy effort to stabilize consumption is through 2 ways. One is to protecting jobs at the struggling business. for example, financing support to the business in trouble in return for them to keep people on their payroll. The second approach is to spur the high-end consumption by the relatively wealthy household in China. For example, we see government-granted duty-free licenses for downtown stores. Actually, I think this approach is probably more effective than sending checks to all of the households, as there is going to be a large share of that being saved rather than being, showing up in the consumption. So I think this supporting measures is likely to continue in the coming months instead of again sending the payment.
Right. You mentioned earlier, Yuan, that 2021 GDP growth would be around 8%, right? Will we see an economic upcycle starting in 2021? And if so, what will be the key drivers?
Actually, after a temporary shoot up in 2021, we expect China's GDP growth to return to the long soft fall trajectory, which is formed before the pandemic. China's economy was already on a decelerating trend, as you can see in this chart on page 6. So it's a sharp deceleration in the nominal GDP growth since 2017, and if you recall, that was when the supply side structural reform getting started. So there is a government-led campaign with deleveraging, decapacity, and destocking. So China was going through some difficult adjustments to correct the structural imbalance. These ongoing adjustments are still far from complete. So they will continue over the medium term, meaning we probably see housing market to cool down. We'll see excess capacity to phase out, and also the corporate sector will continue deleveraging. All of this going to continue to discourage investment and will weigh down the GDP growth.
Do you expect the government will set a firm GDP growth target for next year?
You see, although the GDP target growth was waived for 2020, there were some official targets being set for 2020. For example, we have target for job creation, target for fiscal budget, target for total social financing growth. This is likely how it works in the future as the government continue to de-emphasizing GDP. And it will be more tolerated for the slower growth, because forcing the GDP growth to be above a certain level is conflicting to some other policy goals that, for example, to prevent financial risk and the property bubbles. So I don't know if they're gonna set a target, but de-emphasizing GDP growth is gonna be the trend.
Right. So if we go back to your earlier point regarding China's growth trajectory, are you suggesting that COVID-19 was basically just a shock to China's growth path? So although it was significant, it ultimately won't change China's longer-term growth trajectory?
Yes, I do believe it's a shock to the economy. So it will not shift the growth path permanently. But COVID, of course, is going to make some longer-term impact, because the COVID disruption, it has intensified a few trends that started long before the virus, right? It has strengthened the digital transformation. It enlarged income and wealth gap, and it highlighted the supply chain risks, which is linked to the U.S.-China tension. These are going to be the key factors forging China's growth path over the medium term. For example, the digital transformation, as we hear from the government, their plan for infrastructure development, so-called new infrastructure, and their plan to ease the access for the consumers is also based on the digital transformation. Regarding the income gap, that's going to be a key challenge for the consumption growth over the medium term. And the supply chain risks, it's probably going to have more foreign firms in China to start to consider this so-called China plus one strategy, meaning that their capacity within China is going to be more focused on China's domestic market instead of being set up as a plant to serve the export or the foreign markets. So we need to pay attention to these trends that's intensified by the COVID and see how they're gonna affect or needle move the growth trend for China.
You just mentioned increased inequality as one of the major side effects from COVID-19. This is obviously coinciding with China's larger goal to eradicate extreme rural poverty by the end of this year. I think it's fair to say that without this year's massive government push to reduce poverty, the impact of COVID-19 on inequality might have been even larger, right? In your view, what are the implications of this increased inequality on consumption going forward, especially with consumers at the bottom end of the income spectrum?
In China, actually, a large share of Chinese population, the limit for their consumption is actually due to the low income rather than the protective saving or the saving culture. Around 700 billion people in China, they live in the households where the income per person is under 2,000 RMB per month. This is not our estimate. This is an estimate from an institute called Chinese Institute of Income Distribution. Also, they estimate around 300 billion people in China. Their households, the income per person is under 1,000 RMB per month. So again, it's not like they are unwilling to increase their spending. They don't have the source, don't have the income, being the problem. But if you look at it's just hard for me to see any market force can quickly raise the incomes for this group, because actually we anticipate aggregate growth continue to moderate. At the same time, the robot is going to take over more of the low skill jobs. So it will probably has to be the government to expand the income transfer programs to compensate for these low income groups.
Thanks, Yuan. Let's stop here and see if we have some questions from the audience. I have one coming in on currency. So the question is, the RMB has appreciated more than 5% since May. What is driving this, and what's the outlook? Can you comment on that, Yuan?
Yes, there are a few drivers I can think of. First, there has been strong export growth since Q2, and we have the trade surplus is increased quickly. That means there is increased demand in RMB. Another reason is that there's massive stimulus programs in the U.S. that has raised inflation expectation. Probably also because the the severe COVID situation in the US, it might has reduced the hedging demand on USD. All of these are the factors bolster the exchange rate for renminbi. Over the short term, I think the PBOC is probably unwilling to do intensive intervene at this level of exchange, at this level of exchange rate, because the negative effect of renminbi on exports at this point is quite limited. China is actually gaining a larger share of the global exports. And also there is potentially downward pressure on renminbi if US-China trade tension is going to escalate. So without the intervene, I would think it will allow renminbi to hang on this high level over the short term.
Let's see. Anybody else has any questions? We're happy to answer them. Please feel free to write them into the chat box so that we can see them and pick them up. We'll give it a minute. In the meantime, before we wrap up, unless there's other questions, I have one final question for you, Yuan. Looking at the longer term picture, what do you hear about focus areas for the coming 5-year plan? We know it's being deliberated right now. It's going to be rolled out sometime early next year. What do you think we can expect?
Well, I guess at this point we all hear these so-called dual cycle strategies. I think that would at least suggest that the policy measures will get more focus on enhancing the domestic demand. But related to that, I do expect the government will continue to restrain this old school demand side stimulus, as we observed during as we observed from the policy response to the COVID. It has been quite cautious implementing massive monetary stimulus, even though there is huge growth pressure. So so over the midterm, I think that's going to continue as demand side stimulus being restrained. I also think they're going to have to continue this supply side restructure reform. You see tax cuts. We will see the effort to slow the loan growth for the local governments, the debt growth for local governments. So all this kind of effort, I think they're going to have to continue. Also, I think there will be more industry policies in favor of the high tech segments. Just mentioned, there is supply risks highlighted because of the U.S.-China tension, and there is a tech ban from the U.S. for the Chinese technology companies. It would urge China to build its own capacities to prevent the similar supply risks in the future. So the government gonna probably have to do more policy support on that perspective. Also, we have mentioned the digital transformation. So I think China's government is going to take advantage of this quickening digital transformation to try to improve the investment quality, especially in the fields like infrastructure development. Also to expand the household consumption access. For example, to have more online platforms to offer to have for example the low income and medium income households to access the bargains. So even without a big jump of their income, we can see the spending over income ratio to increase at least marginally.
We have another question coming in, Yuan. This one on Hong Kong and Shenzhen. The question is, it seems that Hong Kong is losing out to Shenzhen and the Greater Bay Cooperation. What are your views on this? Can you comment?
I think it's again, I think this is aligned with this. First of all, I agree, and I think this is aligned with this dual cycle strategy. Again, it's it has to be the domestic market actually to not only to expand the investment and the production of these high-tech industries, but also we need to find the domestic market as a testing field for these new products, because exports can be difficult, and for the private space to develop, that they need to have the market to cultivate such development. So therefore, again, all this focus, what's the advantage for China is huge domestic market, its potential. I think that's part of the reason it's not just Shenzhen, but it's the domestic market being emphasized, and in this midterm planning, economic planning for China.
Thanks, Yuan. We have another question here from Doreen 10. Any thoughts on possible liberalization of China's capital account?
Sorry, can you say it again?
Any thoughts on possible liberalization of China's capital account?
To be honest, I don't think that is a priority for the economic authorities. If you think about it, it's actually a bit conflicting to what is supposed to be the priority, which is to prevent the financial risks. So actually, I guess if the government see the tension between U.S.-China damage the business confidence and increase increase the possibilities for capital outflow. Actually, there is more likely for the policy to go tightening the capital account instead of the easing the controls. So that's my thoughts.
Thank you. Thanks a lot, Yuan. If we don't have any more questions coming in, I think we will wrap it up for today. You're more than welcome to send us questions directly, either to Yuan and me, and we'll be happy to answer them. Yuan, thanks again so much for sharing your views with us today. It was a pleasure to have you.
Thank you, Anka. And I'm glad to be here.
And then finally, as always, we love feedback. So please take just a few seconds